Hey viewers, welcome to our 34th digital event, Earn Your First Million. So today we have our expert speakers who will be talking about mutual funds and the financial planning. And we will also be answering all your questions. So speakers are Venkataraman sir. He is a managing director of Champion Wealth Creators, which is a financial planning services firm. He is a certified planner from Financial Planning Standard Board of India. He has a total work experience of 12 plus years experience in the field of sales and operations, marketing and the business development team management, and running his firm for more than a decade. Welcome sir.
Thank you. Yeah.
And we have our Ulaganathan sir. He is our in-house compliance manager at Zeebo. He has an experience of 16 years in stockbroking and an overall experience of 21 years in the field. Welcome sir. So today, since we are celebrating our World Financial Planning Week, so let's discuss about that, sir.
Yeah.
So what do you think, or what's your opinion on the financial planning?
In India, the financial planning is in a very nascent stage. Okay. Next week, the October 4th actually happens to be the World Financial Planning Day, which is being celebrated in a bigger way across US and other parts of the Western world. Whereas in India, financial planning is not taken step. But I would like to give you some insight on financial planning, how that process is. It is required for every earning member of the family, where it is a very simple process. Okay. First thing is that as a financial planner, I will have an liaison with the client, trying to understand the client, what is his requirement and other things. Then I'll go into collecting data which is more on qualitative as well as quantitative. Qualitative basically to understand about what is his prior experience, what are all the investments he has done, does they have any negative experience, and whether that investment has helped him to beat inflation. And then I will also try to understand his future goals, which could be planning for his retirement, or planning to buy a home, or study abroad, planning for UG and PG for his daughter, as well as marriage and other things. Then we will collect the data, then we will analyze the data, how this data will help him. So for example, for say like he is 40 years now, his kid will become going for higher education at the age of 50. In 10 years, what is the amount he is required? What is his planning to do? What is the future aspiration of the kid as well as the father? Then we will work on that goal, whether how to reach that, what type of investments to choose, what type of risk profile we need to do. All this we will do. Then we will present the financial plan. These are all the products which you can do in order to reach the optimal goal at the age of 50 or 55, whatever. And then once he becomes 50, the girl will become 20 or 21, or the boy will become 21. So nowadays, if you also see that the parents are planning for both UG and PG, so that also needs to be factored. And then we will present the plan and make the plan implemented. And if there is any structural changes in the economy or in the fund management, then we will keep reviewing and keep suggesting him to help him to reach the goal. This is the financial planning process, but this process has not been followed in a bigger way in India. In India, what happens is many people get into more of a product seller. How this product can give him better return, chasing the returns, rather than going through the process, which we are trying to implement.
Okay. So then we'll talk about the mutual funds. So what is your opinion on mutual funds?
No, see, mutual funds, as one of the fund managers has put it very bluntly, mutual funds are created for the poor, but where the rich invest. It is as simple as that, because mutual funds are one product where you have solution for 1 week, 1 month, 3 months, 6 months, 1 year, 3 year, 5 years, so on and so forth. There are different investment products available both in equity, debt, hybrid, international equity and all. So depending on the goal, the client can invest so that it will always give him a better investment experience. Not investing in equity for long term, in equity oriented is also a risk, because you will not beat inflation. And having said that, in short term, you should always consider a conservative debt fund or a hybrid fund, so that it will help you to beat conventional savings scheme with liquidity at the click of a button. Yeah.
So, do you think young people of this generation are more interested in investing, like for long term?
If you notice during COVID, the amount of demat account open in India has ballooned like anything because people had a good time. But what happened after that is that investors have not doing the research required to invest in which stocks. What is the fundamental research to be done? They have just invested based on their numbers or some technical analysis or based on some charts. But finally, all the demat accounts which got opened has also been closed. So investors has to be handled because financial investment require a lot of understanding. You need to have a robust study on fundamentals, trying to understand the different sectors, when to enter, when to exit, all these things. And as far as young investor, what I see is that they are looking for instant gratification. Unfortunately, finance is investment world is a delayed gratification. It is like there is a saying, if you want to invest, you need to see the grass grow or paints getting dry. If you want to have excitement, you need to go to casino, not in the investment world.
And we have a question to Leganathan sir.
Yeah.
So, what are the recent or upcoming regulatory changes that affect the investors, sir?
So, regulatory changes, we all are aware that today is the due date for opting for a nominee actually. The one thing that in the update, there is an update 3 days back, we received a circular from SEBI stating that the nomination, appointment of nomination is extended till 31st of December. Actually. Earlier it was 31st March based on the representation given by the market intermediary. They extended till September 30th. Actually today was the due date. So based on the, again, the market intermediary represented to the SEBI and exchanges, that they required time for opting for a nominee. So again, SEBI considers such a request and they have given an extension till 31st of December 2023. That is the one point I'm having as of now.
Okay.
So my request is to, maybe the extension may be for 31st of December 2023, but I request all the investors to please offer a nominee at the earliest. That will, one side it is a beneficial for them, and the other side this will not hamper your trading activities beyond such time. So in case of something happen to the investor, that amount will be automatically given to the nominee who have nominated for the particular account. The recent one report is came through last week, I guess. Finance minister only they disclosed it, there are 1 lakh crore unclaimed fund is lying with banks in India. All because of the nominees not registered because of that only. That is the reason why they are pushing all the financial institutions to get their clients nominated.
What is the necessity to add nominees, sir?
A simple example, see, if I am not nominated for my account, so something happened to me, tomorrow one thing is that if somebody knows that I have invested in so and so, they can able to claim it, but the procedure to be followed for claiming that amount is completely different. Okay, I'll tell you the simple example in case if I am nominated. Okay. See, for example, I am nominating my spouse or my children, my kid. The simple thing is that they are supposed to have one more bank account in case of claiming my fund. In case of demat holding, they are supposed to have one demat account. Simply they can come back to the organization where they have a bank account or a demat account. They can claim that this is my husband's or father's account, or I have been nominated for it. This is my demat account. This is a copy of the master copy. So I would like to claim this settlement, whatever it is, either it is a fund or securities. What the organization or bank will do, they simply collect these informations, simply move the securities or funds to that whoever nominated for the particular account, they will simply move this. Or else, they are supposed to prove that all those steps, that I'm passed away, that anyway that certificate needed, the death certificate is needed, legal hire certificate they need, That too goes for certain extent only.
Just because
In
nominee
case-
was not added.
correct. In case that amount also goes beyond certain extent, let's take for example 5 lakh rupees. They supposed to approach the court, they need to get the succession certificate, then they need to produce all the certificate, NOC, blah blah blah, everything. Then only they can able to get that money or securities back to their account. So it's better to nominate, or irrespective of whether even if it is FD also. Nowadays banks are offering a facility to nominate for FD. Whatever investment you have, you can able to nominate ESI, EF, everything. You can nominate wherever the financial assets are there is an option for nomination. Please go for it.
Oh, nominee is mandatory.
Mandatory.
Yeah, and the problem is that if they don't nominate, what happens is they have to submit a legal ad certificate.
Okay.
They have
That's
to
a
give
big
no
procedure
objection
about
it.
certificate.
Documents, correct.
And what happens is nowadays I have encountered for some of my clients who has died and he has died 10 years, but they have found the investment now. What happens is daughter is living in one country, mother is living in another country. So we have to get this everything done in a physical way.
Okay.
Electronic copies will not do.
It won't be accepted.
Because there is a legal certificate, notary, and everything has to be done.
Okay.
It should be done in a proper paper, and it has to be attested by somebody, and there should be some witness also to that.
Okay.
So see the amount of paperwork and cumbersome process.
Rather than
Just
doing that,
ensuring
we
that
can-
you are nominating, and nowadays everything is online. Just you need to click that link. Every financial assets will have a single thing. For example, in mutual funds, there is a single nomination link in CAMS and KFintech. Once you choose your PAN and give those mobile number, a OTP will come where all the folios where the nominee is not there, you can just give in a single click of a button.
All will take
All
2
these
minutes.
processes, yeah, it hardly takes 2 minutes, but it avoids lot of complicated paperwork and delay.
Okay. So we'll continue with the mutual funds, sir. So which is a better option, mutual funds or ETFs?
No, VTF is also a mutual fund which is traded directly in the stock
Or the
exchange.
individual stocks also will be included.
Sorry?
Individual
Well,
stocks.
no, individual stocks. See, let me tell you, let me give an example. One person is an IT employee
Okay.
who is completely into his business and he is buying a stock. Like that stock could be a large cap, could be a mid cap, could be a small cap. And when he is buying the stock, what is the return expectation he is having? That is thing. Whether he can follow the annual reports on a diligent basis, whether he can attend any of the AGM, whether he can go through the financial ratios, whether he can understand what type of cyclical business the stock is, what is the upside, whether he has bought it at a premium or at a discount, what is the trigger price he has planned to exit in case if it is planned for a goal. Because when somebody is investing in equity, it is understood that it is for perpetual period. So all these things to be done, and if the company has got all these things stick, but the corporate governance is an issue, the stock in spite of having good valuation will come down.
Okay.
So all these things are there, and this requires a steady and consistent and regular practice of going through this. This has been done by a professional fund management team in a mutual fund where a fund manager is also assisted with the co-fund manager. Along with that, there are some 8 to 10 investment analysts. On top of that, there is a CAO and there is a CEO, and each has got their own roles and responsibilities.
Yeah.
And all this is done at a fraction of a cost. Why can't you utilize mutual fund and get into that? It's as simple. But
Yeah.
if somebody, but I am not saying that you should not invest in stock. You should invest in stock, but some amount of due diligence or some amount of awareness you need to have. Investing just blindly, definite no. Yeah.
So where can I buy or invest in mutual funds?
It is very much available. First thing is, when you are planning to invest in a mutual fund, always engage with the financial planner,
Okay.
who will try to do the risk profiling, due diligence, trying to understand why you want to invest, where are the goals, what is your short term, medium term and long term requirements, and then he will give you a bucket of products. He will run through your risk profile and suggest products and take it forward. And this is available. If you go to Amphi website, you will find a financial planner. You can see that. And there are many financial planners available who are ready to help you, and this industry is growing to grow much faster. That is it.
So is investing in a large cap mutual funds is better than a small caps?
Okay, investment is like a thali.
Okay.
Okay, சில பேருக்கு சாம்பார் சாதம் பிடிக்கும், சில பேருக்கு தயிர் சாதம் பிடிக்கும், சில பேருக்கு பிரிஞ்சி பிடிக்கும், right? So if I say I will only have chapati, I will skip curd rice, I will only have sambar sadam, I will skip a thing. That is not the thing, because see what I am saying is that large caps are large businesses which are oriented. There most of their revenue comes from international dollars. For example, all the IT companies, 90% of the revenue comes from US and Europe.
Yeah.
In India, it is not domestic. Whereas if you look at the mid and small cap, 75 to 80% money, the sales happens within India. The remaining 20% has there in Europe. So, for example, when you are having a bucket of stocks, which can be a combination of large, mid and small, rather than saying only large cap or small cap, I would say a combination of multi cap, a combination of flexi cap. That is where you get the best of all worlds and you get exposed to all different companies and different sectors of the economy.
Okay.
Diversification is important.
Yes.
Diversification இருந்ததுனாலே அதுதான் ப்ராப்பரான ஒரு இன்வெஸ்ட்மெண்ட்டுக்கான ஒரு விஷயமா இருக்கும். இப்படி நம்ம வந்துட்டு ஈக்விட்டிஸ், மியூச்சுவல் ஃபண்ட்ஸ், சம் அமௌண்ட் வந்து நமக்கு லிக்விட் கேஷாக வேணும்னு சொல்கிறோம், அது இந்த ஃபார்ம் ஆஃப் எப்படி வச்சுக்கலாம்னு சொல்லுவாங்க. அந்த மாதிரி டைவர்சிஃபிகேஷன் இஸ் ஆல்வேஸ் பெஸ்ட். அது வந்து நீங்கள் மியூச்சுவல் ஃபண்டில் வரும்போது நீங்கள் அந்த டைவர்சிஃபிகேஷனை நீங்கள் அதை பார்த்துக்கலாம்.
Okay. Can you tell us something about the running account statement? I mean, settlement.
It's due for coming week, I guess.
Yeah.
Okay. So, as per the regulatory changes which has happened last year, SEBI has introduced a single day running account settlement across all the clients. It's applicable for all the trading members in India, which is all the clients needs to be settled one single day on the particular quarter, which is coming Friday, 6th October 2023. So whatever client funds lying in the client's account without utilizing, which will be released to the client's respective client's bank account at the end of the day, 6th October 2023. So we prefer for that to avoid the trading disturbance on Monday, beginning of the day. I request all the clients to please be aware of it, and that you can immediately pay back to the broker using the multiple options we have for paying the money to your trading account. Simplest way, we have UPI provisions and fund transfer, third party funds. So we have a payment gateway. Using that, you can repay the amount to avoid the trading disturbance on Monday morning.
So we have a questions from live, sir. So what are some key regulatory things? Just a minute. Key regulatory bodies and regulations governing mutual funds, and how do you protect investors?
You would like to answer?
Yeah,
see, in mutual funds, SEBI has come with huge regulations where, for example, in an equity fund, what is the definition of equity fund? It has to carry 65% exposure in equity, and so as to qualify for equity taxation, which has got 1 lakh capital gain exemption every year. And if you look at the investor protection measures, there is huge amount of disclosures. Every month you will get the fact sheet in your mail. What is the portfolio? You will know about the total expense ratio charged by the mutual fund on a monthly or quarterly basis. If there is any change also, it will be communicated as and when, right? And as a mutual fund, what is the benchmark they are having? For example, in a large cap, it could be a BSE 100 or NSE 100. A multi cap or a flexi cap will be BSE 500 or NSE 500. Similarly, for large and mid cap index and other things. So how much of additional return they have generated over the benchmark over a period of time? It could be for 1 year, 3 year, 5 year, 10 year, from inception till date. That is also being provided in the fact sheet. And any fundamental attribute change being done by the fund manager. For example, the fund manager feels that he will take new exposure to REITs, real estate investment trust, which is a commercial cash flow which is coming in. If he is going to consider that in his investment in a hybrid fund or something, he will send a addendum, or he will send a request to the investors saying that they I am going to include this RET part of the portfolio.
Okay.
And if you are not comfortable with that, investors are given a free exit window without exit load. That type of transparency and empowerment is being done for the investor community.
Okay, the next question is, what is the expected return when investing in mutual funds?
This is a very vague question, because mutual funds itself, if you look at, debt has got 16 categories, more than that, 18 categories now. Equity has got 12 categories, and hybrid also got some 6 to 7 categories. International equity has got some 7 to 8. So which category you are talking about, that determines. Liquid fund will always beat the call money market. The short term fund will be benchmarked against a treasury bill, the short term paper from the government. A 10-year GSEC will be done with a gilt fund or a dynamic bond fund or a long duration fund. This is in the debt. Similarly, if you look at in equity, you need to benchmark against BSE 100, BSE mid cap, BSE small cap, or sectoral funds, thematic funds, like that. So, to answer that question, first you need to identify what is the duration, then you need to look at the
proceed with that. Yeah. Okay. So next question is for Loganathan sir. So what are the primary factors that affect a mutual fund performer?
Performance, again, what the Sarisi explained now, the same thing only. It depends upon the team which we select. That is the most important. Okay. What is a basket? Which basket we are into? Where we are investing, that is matters a lot. See, for example, if you are selecting the basket which most of the funds, most of the investments goes to, I mean the allocation I am talking about, where the allocation is goes. In case we are selecting a hybrid fund or equity based fund, all the investment, most of the investment will be allocated to the stock market only. Okay, all the funds will be allocated to 100% allocation also might be possible. So if markets based on the market direction, that fund will be impacted. Okay. Similarly, if you are focusing, that fund is focused on a debt fund. Okay, based on the debts, whatever government policies, that will affect that particular fund. So the mutual fund investment based on that, the impact will be based on the fund which we opt for. Okay. Where the allocation is goes, that underlying is most important. That is a common factor which will affect the mutual fund investments.
So next question is for you, sir.
Yeah.
So the difference between the capital gains and the dividend income, could you explain it, sir?
No, from April 1, 2021, what happened in dividend, I will just tell you. Till March 2021, dividend distribution tax is paid by the company, and the investors, whoever is receiving the dividends is tax free in the hands of the investor. But post April 1, 2021, what the finance ministry in the budget, what they have done is, they have said that the companies don't have to pay the dividend distribution tax. It's been given directly to the investors. So what happens is, investor has the burden of paying the dividend distribution tax. Okay. So what happens is, in a financial year, if the dividend what you received is only up to 5,000, then the dividend income is tax free. But if it exceeds more than 5,000, then 10% tax will be deducted as and when it is being declared, when that threshold limit of 5,000 goes away. Whether it is applicable to both equity mutual fund as well as for equity shares, both have the same. As far as capital gain is concerned, capital gain is only will come during the redemption or withdrawal in the fund. For example, you say like somebody has invested 1 lakh 3 years before, and now the value has become 1,75,000. So you are withdrawing the entire amount for a short term goal or something like that. Okay. And it is a equity fund. So what is the total gain you had? You had 75,000. In equity, up to 1 lakh, it is tax exempted. So that 75,000 gain what you have, even though it is a gain, it is an exempted income. Like in your savings bank interest, up to 10,000 is exempted, right? Similarly, in equity, any redemption up to 1 lakh in a financial year per PAN is exempted.
Okay. Yeah. So the next question is for Loganathan sir. So what is the difference between the regular and a direct plan?
See, according to investor, how they wanted to invest, that is a matter. See, if as an investor, if I know about the funds, I know to manage, how to manage the funds, I can go for a direct funds.
Okay.
If I'm going through the financial planner, usually they will opt for the regular plan. Okay. The difference is the commissions which we the person who sell this product will used to get. In case of direct funds, there will not be any commission to be paid to the person who is selling this product. Whereas in regular, the person who is selling this product will get the commissions. Accordingly, that investor, the amount of invested, right? That will be allocated for that commissions also. So that is a only different. Apart from that, there is no difference in the performance of the particular funds between the regular or direct. That's it.
Yeah, I will add one more thing. Is it the not only the financial planners, the mutual fund distributors? This is the big, large.
Correct.
This is also there.
Mutual
See,
fund distributors. In fact.
in a direct plan, what happens is that you have been given an option to invest. It is like a tool. It is like in a hotel, if you go, there is some self-service option. There is also a server taking your need. In self-service option, you know what you want. You take it and go away. In a serviced restaurant where a server comes in, gives you different products, try to give you and also helps you during the things, whether you require everything. This is the service and the experience which makes the difference. That is one thing. And second thing, what you need to do is, most of the advisors or the financial planners, they will have some inbuilt tool, CRM tool, which will help you to see the goal. When you invest directly, what happens is, it could be a fintech platform, it will exist today, tomorrow it will not be exist. So, for example, let me tell you, there was a company called as Funds India, which was there 2 years before. Suddenly they vanished India. All the investors were left orphaned, right? Because they don't know where they have invested. If the person is tech savvy, he will make the change. But if there is no assistance, or if you are not new to, if you are new to finance, then it makes sense to approach a mutual fund distributor or a financial planner.
So there is a question, sir. I am an aspiring fund manager. I just want to know, what is the fund managers do?
Aspiring fund manager, very good. Most of the fund managers starts as an investment analyst, but they have education in IIT, IIM and all. They have a huge number crunching game. And SEBI has made the portfolio managers exams also. Like for distributors, we have a portfolio managers distribution exam. There is a portfolio managers exam also for them. So they need to be a CFA. We are a CFP, Certified Financial Planner. They need to be CFA, Certified Finance Analyst. That they have to do, which is internationally recognized. On top of that, there are some NISM courses which they need to do. It is purely based on various analysis and simulation methods and other thing, and it is a very challenging role and highly rewarding also. And the best wishes for the person who is planning to do, and there are wonderful institutes where they can do. And if you are young, you can become a financial analyst and a portfolio manager over a period of 3 to 5 years. And the industry is growing exponentially.
Yes, that's most important. So we have a question from Abhijit follower. So, hi sir, as a beginner, what are the potential risks associated with the mutual funds, and how can I avoid those risks?
Okay, I would rephrase the question. What he says risk is, he actually mean the volatility. The NAV going up and down. This is what he mean as risk. See, always in a mutual fund, always remember, the chances for the capital going down is much lesser. Okay, but the product, because mutual funds are tagged to NAV on a daily basis, daily you will see the price changes. So, in a debt fund, if you stay invested for, say like in a medium term debt fund, if you stay invested for 3 years, you can expect a return in the range of 7 to 9%. With a fixed deposit. Having said that, you need to do the due diligence and other things. If you stay invested in an equity fund, say like for 7 years and above, your chances of capital erosion is 0.
Okay.
Whoever has invested in a diversified mutual fund have never experienced capital loss. If you stayed invested in an equity fund for 10 years, the worst return itself is more than 9%. The worst return. The best return happens to be 24%. Okay? And if you stayed invested in a mutual fund for 15 years, the worst return itself is 11% CAGR.
The risk in mutual funds is lesser.
Yeah, the risk is only based on the time. As you give more time, the probability of capital loss is not there. So, when you are coming to equity, come with a 7-year plus horizon.
Okay.
When you are coming to a debt fund, come with a 2-year horizon if it is a medium term. Of course, for liquid funds and ultra short term funds, it can be 3 months, 6 months, 9 months also.
Okay. So, sir, again, as a question for you.
Yeah.
You said CFA is a globally recognized certification.
Yeah.
So, could you tell us what are the courses involved in it?
It requires financial management.
Okay.
It requires usual a lot of analysis on ratio analysis. It requires regression analysis. It requires a lot of stimulation techniques. It is a more into data, more into analytics, more into international trends, and you will also understand the different investment options across the globe, different best practices followed by the different fund management across the globe. So it is a quite robust course, and it will have 2 years or 3 years tenure, and it requires rigorous planning, and it cannot be done on their own. It requires coaching. There are institutes which are doing this.
And the next question is, what is the meaning of NAV? So, is it really important for the investors? Can you please explain it, sir?
No, NAV is at any point in time is a net asset value. In a mutual fund, if you are buying today, what is the price? That is reflected in NAV. So, NAV will give you the total value of the mutual funds on a single day. What is the price of the NAV after factoring in the expenses, the fund management charges, the R&D charges, and what is the portfolio value exhibited on that day. That is the NAV on that, and the NAV keeps C, and the NAV is never a metric. Let me put it this way: a fund which has started last year has given 10% return. Okay, a fund which has started some 15 years before, whose NAV is 1000, has given 10% return. The NAV of the new fund will be 11, which is 10% of 10 to 11, and here it will become 1100. So NAV is never a factor to consider investment. NAV is only based on to understand what is the track record and how exponentially it is growing over a period of time.
சிம்பிளாக சொல்லணும்னா இப்போ ஸ்டாக்கில் வந்துட்டு ஒரு இப்போ இன்றைக்கோட இந்த ஸ்டாக் ப்ரைஸ் இது இன்றைக்கி இந்த ரேட்டில் ஓப்பன் ஆச்சு, இவ்வளோ தூரம் ஹைப் வந்தது, லோ அப்படிலாம் சொல்கிறோம் இல்லையா? ஸோ அந்த மாதிரி மியூச்சுவல் ஃபண்ட்ஸில் அந்த பர்டிகுலர் ஃபண்டோட ப்ரைஸிங் தான் என்ஏவி, அதாவது நெட் அசெட் வேல்யூ அப்படின்றது. சிம்பிளாக புரிஞ்சுக்கணும் அப்படின்னா NAV அப்படின்றது nothing but the price of the particular fund. அவ்வளவுதான்.
But in stocks la வந்து just to give you one more insight, bonus இருக்கும். அப்போ வந்து prices குறையும், ஆமா, rights issue அதெல்லாம் இருக்கும். பட் இதுல வந்து அந்த adjustments எல்லாம் எதுவும் இருக்காது. And when you are choosing the fund, you should always choose growth rather than the IDCW, which is the dividend option, because growth will keep appreciating over a period of time.
The next question is for Loganathan sir. So, what are the sovereign gold bonds?
Sovereign gold bond வந்து பார்த்தீங்கன்னா one of the investment tool which is guaranteed by Reserve Bank of India. It's nothing but it's a replacement of physical gold. So
okay.
If you decided to invest on gold, it's not necessarily to go to the jewelry shop and buy the gold and keep it at the home or locker or something. Instead, you can buy the bonds, which is secured and discounted from the current market price and guaranteed by the Reserve Bank of India as well as Government of India.
Yeah, actually coming to the guarantee, what I would like to say is, see, what is the objective of launching sovereign gold bond by RBI? To dissuade people in not buying physical gold. Okay, and it comes with a 8-year tenure where 2.5% interest per annum is paid to you because you have not bought a physical gold, you have bought an electronic gold, and the safety of your bond is been guaranteed. It's not, the price is not guaranteed, the safety of the bond is guaranteed. And the biggest advantage in the sovereign gold bond is that at the end of 8th year, it comes with an automatic maturity and you don't have to pay capital gain tax if you held to maturity. Having said that, there is also a liquidity available after 5 years. You can sell it in the secondary market, provided there is another buyer who is ready to buy at the price you quote. And this is a best, for example, if somebody has, say, like they have a daughter at the age of 16, if they are planning for a daughter's marriage at the age of 24, anyhow they have to buy gold, because in India the tradition is to give gold, right? For that, a sovereign gold bonds, because if you buy a physical gold, you need to keep it in a locker, and if you go to the bank, you have to pay charges also for that. This will all avoid everything, because the price of the gold at that point in time, the average last 3 months price will be calculated and given to you. On top of that, there is no capital gain, with you do have the security also of having that product. This is useful when we plan with gold based investment, and gold as an asset class will always fight inflation, even though it will not create wealth, but it will fight inflation because it's a hedge against inflation. The world is completely VUCA, always the neighbors are fighting, there is an economic war, there is a bio war and all these things. So gold as an asset will always find some allocation in an invested portfolio, but don't go overboard.
Okay.
இன்னொரு அடிஷனல் பெனிஃபிட் என்ன இருக்கு அப்படின்னா, இது நீங்கள் டிமேட் ஃபார்மில் ஹோல்ட் பண்ணிக்கலாம்.
ஆமாம்.
ஓகே, நீங்கள் ஃபிசிக்கலாக நீங்கள் வச்சிருக்கிறதுக்கான அந்த ரிஸ்க் இருக்கு இல்லையா, அதை வந்து நீங்கள் இதில் மிட்டிகேட் பண்ண முடியும். டிமேட் ஃபார்மில் நீங்கள் ஹோல்ட் பண்ணலாம். நாளைக்கு நீங்கள் செகண்டரி மார்க்கெட்டில் லிஸ்டிங் வந்த பிறகு இதை டிஸ்போஸ் பண்ணணும், இன்கேஸ் இன்னொருத்தங்க அதை பை பண்ண ரெடியாக இருக்காங்க அப்படின்னா, யூ கேன் வெரி வெல் யூ கேன் செல் இட் இன் த செகண்டரி மார்க்கெட். And moreover, if you want to transfer this to somebody else in your family, or you can easily transfer the securities in the electronic format. That is an added advantage which we have in SSGB.
Next question is from the follower is, I am starting my career and I am in mid-20s. Is it okay for me to invest now in mutual funds, and how much should I start with?
Okay, you are a student now,
Yeah.
right? And 50% of your pocket money you start invest. Because in mutual funds you can even start an SIP at 500 rupees or even lower than that. But 500.
What is the minimum amount?
There are some mutual funds which even gives you 100 rupees as monthly SIP. But the value of 100 will be very, very lesser. Even if you go to a coffee shop, it will become 100 rupees. So
Yeah.
it makes sense to start with at least 500 rupees. 50% of your college pocket money can be spent, because what you are doing is you are allowing that money to compound over a period of time. You are planning for a wonderful retirement even by starting now. And having investment at this age, even when you are not earning, is the best thing to do. It brings in discipline and it brings in the power of compounding.
Exactly.
So many people think that for investing they are supposed to have a minimum of 10,000 rupees or lakh in, not like that. As I said, even they start the SIP for 100 rupees also. There are funds available in the market where they can provide 100 rupees as a SIP per month. They can start doing that. Even they get the pocket money from the parents, right? They can start investing. A lot of avenues are available for investment.
Yeah.
We need to explore it, we need to start it. That's the
That's
most
what
important
people are
thing.
not aware of
Yes, of
actually.
course.
So the next question is the interest rate of SGB paid directly to our bank accounts?
Yeah, it will be paid. See, first year, for example, last month there was a SGB which got closed. So it will be paid in 2 tranches. The first year only it will be pro rata depending on the financial year, and every March and September you will get the interest rate, which is directly paid to the bank account, because at the time of applying they will get your PAN, Aadhaar, your photograph, your check leaf and bank details and everything, because everything is done electronically. It will come with a NSDL reference number, that interest is being paid on this date. With that reference number, it will directly hit your bank account.
Okay.
Yeah.
That's for Laganathan sir. If I choose to not withdraw my capital, how will the fund manager distribute any dividend on the investments?
Sorry, come again. I didn't get your question correctly. No?
I'll just once again. Like, if I choose not to withdraw my capital,
Okay.
how will the funds manager distribute any dividend on the investments?
See, investment is different. Something the dividend is something different.
Okay.
So investment amount, whenever you redeem that, is it talking about a mutual fund, I guess. So
Exactly.
whenever you redeem the fund, then you will get it. If you are not redeeming, then keep on go. Then as and when that particular fund manager is closing that particular scheme, then at that time, all the corporate action. So they will close it, then they will automatically give a credit to the bank account linked to the particular portfolio. Okay, folio.
If I understand that question, what is asking is if the stock which is paying dividend, whereas the fund manager has not paid dividend because I am in growth option. If I understand that way,
Okay.
correct me if I am wrong, then what happens is that the dividend is also being reinvested in the same scheme,
Okay.
so that the NAV will keep growing. Whereas it is not a dividend scheme. Always remember, a mutual fund paying dividend is not because the stock has paid dividend.
Okay.
The mutual funds pays dividend in the dividend option based on the distributable surplus they have, not on the dividend paid by the stock.
Okay.
Right?
So the next question is, we are turning everything into digital nowadays, yeah, and I'm a bit of hesitation. Is it secure to do a big transaction through online? Important question, I guess.
Yeah, see, it is very, very secure because see, our UPI framework has been highly appreciated. NPCI has won many awards. In fact, France is trying to absorb NPCI system, their UPI system in their country.
Okay.
In digitally, we are much, much robust than the Western world. And our transactions are secure. Only thing is that whenever you are downloading a new app or anything, just ensure that whether it is part of the mainstream. Just don't download based on ads and anything, because there are apps which is done. For example, a Google Pay is a certified thing, a Phone Pay is a certified thing, right? Similarly, a Beam app, similarly Paytm. These are all brands which which has got all the licenses and everything. Some of them are payments bank. Some of them are UPI digital service provider. All these things are there. Hence, it makes sense that you need to invest in those names which are known to you rather than investing in something which are based on ads or clicks or anything. Just verify the source and do it through a Play Store, and these are all secured because NPCI, these are all the service providers which are part of that, and you can go through NPCI infrastructure to understand the certified apps which can be utilized.
Next here is a general question, sir. As a working woman, how much percentage of my salary can I invest in mutual funds for my family in my career, like in my future?
See, as a working woman, you have a dual responsibility of managing the family as well as your work. So, most of the women investors, they actually they are very good savers, but they are not great investors because they save prudently through bank savings account, fixed deposit, or government scheme. But what you can invest is that 50% can be used for consumption, right? Another 30% can be used for investments. Another 20% you can always keep it for short term or exigency whenever it's required. 50% for consumption, and the remaining 50%, 30% for goal oriented. Another 20% is for short term.
Okay. So the next question is for Ulaganathan, sir. So what is the difference between the stocks and the bonds? Like both are issued by the same, companies, right? So what is the difference between them?
Oh, stock is nothing. Stock is, everybody is aware of it. See, that company is listed in the securities market, which is traded electronically. Okay. Bonds is nothing but issued by the private. There are a lot of bonds are there issued by private companies. State government bonds are there and central government bonds are there, which is released by the particular companies or state government or central government. These are the bonds, various bonds available in the market currently. These are also listed in the securities market also, which can be directly investor can invest on bonds.
Can I add one more point in
Yes,
this?
sir, definitely.
In stock, you are participating in the profits of the economy, profits of the company. In a bond, you are actually giving loan to the bank. It's something like you are giving loan to the company where the company is paying you interest on every year, or interest can be on cumulative on quarterly, half-yearly or annually, and you will get the price of the capital, the terminal value of the bond at the end of the term. Whereas in a stock, you participate in the stock's profit of the company, also you participate during the losses of the company also.
Okay.
This is safe investment, this is a growth investment.
So question to both the speakers are actually, so what advice could you give to your 20 years old self?
Yeah,
It's a general question, I guess.
Yeah, I think 20-year-old son will always be looking at exploring the world, exploring the next big thing, buying the new bike and everything. I will inculcate the habit of discipline in him. I will inculcate the importance of power of compounding in him.
Okay.
I will also make him understand a penny saved is equal to a penny earned.
Okay.
So I will only urge him to not to fall prey to the world of instant gratification, because nowadays people, if they have iPhone 13, they have wanted to upgrade to iPhone 14 in 6 months. If they have explored India, they want to explore abroad things.
Exactly.
So you have time, you should definitely enjoy. Not I am saying you should not enjoy, but what I am saying that don't fall prey to instant gratification frequently. Plan diligently, and if possible, allocate some money on a monthly basis for a long-term wealth creation, which will come very handy on a rainy day.
Okay. So what is your opinion on this, sir?
Starting investment at the earlier stage is always good actually. So 20 years not later, but they can start invest on the earlier stage itself. That is
Okay.
my opinion.
Okay. So the next question is, why should someone invest in mutual funds instead of investing in individual assets? He can diversify that, to ride the
In
wave.
individual assets in the sense?
That's a gentle question they have asked about
No,
it, sir.
why you need to
Diversification.
why you need to mutual fund in thing is professional management. All the you will have a bucket of stocks. Investing in a single stock, you are exposed to the single risk. Here you are having a portfolio of 50 to 60 stocks at a different percentage level, and the same stock is not being retained. You will have a
Okay.
diversified portfolio, and professional fund management is there. Due diligence is done by the fund manager on behalf of the investor, and most of the mutual funds attends AGM on your behalf, so they can question the management. They will
Okay.
have forensic audit can be done by the company, because if there is any threat, they will be the first to know before it comes into the market. When you are investing in a stock, you are only been given the history of what has happened in the past.
Okay.
But to know the future, mutual fund managers will have direct coordination with CFOs, chief financial officer, or CEOs or CIOs, so that they will understand about the growth of the company. They will have a discussion with the vendors, they will have a discussion with the employers, the stakeholders, and their suppliers, and all these things. And they can conduct forensic audit, they can inspect their company. All this can be done by mutual fund at a fraction of the cost. So now you understand why you need to invest in mutual funds.
Exactly. The next question is, what are the risks associated with investing in equity market, and how can investors reduce it?
Yeah, equity as an asset class, not in India, across the globe, is always volatile. Okay, what I say volatile is going up in the short term is also volatile, coming down is also volatile, where the price erosion can also happen. What you need to understand is that whenever you are investing in an equity mutual fund, the first thing is give ample time frame. That means I will not come into this ask for liquidity in the next 7 years. I will stay invested in the cycle. That is the fundamental attribute which is required when you are investing in an equity mutual fund. Second
Okay.
thing, equity mutual funds, the easiest way to invest is the SIP. Do a small contribution on monthly basis, see the power of compounding, and get the benefit of compounding over a long period of time. That is there. And there are different styles of equity mutual funds. For example, some people will follow growth style, some people will follow value style, some
Okay.
people will follow bottom up stock picking, some of them will follow top down order. So there are some different styles being adopted. That is why the different styles will work well at different times. So by giving enough time, you will ride over the volatility and you will get the positive real rate of return. What I am saying, positive real rate of return, if your inflation is 7% and if your investment is giving 12%, you are getting a very positive real rate of return.
The next question is for Lignathan sir. How can I research to invest in equities?
For equity research, there are many avenues available.
Okay.
There are you can start reading the exchange websites first. Okay, as a beginner, I always suggest first read the reports of the listed companies first. Okay, in case of equity market, many reports are available in the forums. Relevant forums are available. As a beginner, I always suggest read the reports of that company which is available, released by the, for example, NSE, BSE, they go to that corporate releases. They can always able to read the reports of the companies listed in the market. I always suggest please go through it, do the paperwork first, read the fundamentals, then go for a technical. That will always give you the fruitful results.
That is the best way to do that. So the next question is, what is the capital allocation and how do fund managers do it?
Fund managers will do based on the investment objective and investment strategy.
Okay.
For an equity fund, the investment objective is to create wealth over a long period of time. The investment strategy is, if it is a large cap, predominantly it will be invested in large cap. If it is a mid cap, predominantly will be in mid cap. If it is a multi cap, for example, in multi cap, you will have 25% exposure in large, 25 in mid, 25 in small. The remaining 25% is the discretion of the fund manager. Whereas in a flexi cap fund, the universe is big, BSE 500 or NSE 500, but the fund manager has the opportunity to invest in large, mid and small according to his convenience, and also the remaining 35% can be invested in international equity or in cash or in short term debt also. So that flexibility is also there. So coming to the investment, investment strategy will determine what type of investments will be done, and the style of the fund manager will also give you an idea about whether he is growth oriented, value oriented, or a combination of blend of both and all these things.
Where to gain knowledge, sir, about the investing in mutual funds?
You need to gain knowledge in investment mutual funds. Okay.
Yeah.
For that,
Start investing.
Start investing. That is the most easiest way. And second thing is that as an investor, as I keep repeating, you need to identify the goals and start investing.
Okay.
Know the goals, whether short term, medium term and long term, and then identify the funds. That will help you to be level headed, not being swayed away by market movements and the market emotions. Yeah.
The next question is, what is the difference between capital gains and dividend income?
Capital gain will come when there is a redemption, when there is a the portfolio being redeemed. Yeah, and dividend income is whenever you have a stock, the dividend is being paid to you, or when you have a mutual fund in a dividend option, which is called as IDCW.
Okay.
Income distribution cum withdrawal, that is what they say, because dividend, because they are paying it from the distributable surplus, that will be considered as dividend income. In dividend income, once you cross the threshold limit of 5,000, 10% TDS has to be paid. And in capital gain, if it is an equity fund and if you have stayed investor for more than 1 year, you are eligible for 1 lakh exemption per financial year.
In case of equity, the dividend will be worked out such a way like, see for example, I am holding a XYZ company limited.
Okay.
That company performs well, and then in the meeting of that AGM, they will decide, they will go for a dividend distribution from their profit to the investor, those who hold the securities. Okay. For example, as I said, if I am holding a XYZ company 100 securities on particular day, they used to take it on particular, they will announce the record date for taking the holdings on the particular day, that is called record date. On that particular day, they will declare like, if you hold 100 securities of XYZ limited company, we will give you the dividend of 2 rupees per shares. For example, if I am holding 100 shares in my demat account, on the record date, they will record these informations, they will pass on to that particular company, so that based on that record, they will credit 200 rupees to my bank account, which is linked to my Demat account. This way they will distribute the dividend, which is profit of the particular organization decided by the AGM and will be given to the investor, those who hold the securities in their account. This is the dividend. Whereas the capital gain, as I said, I am holding 100 securities of particular company which bought at 100 rupees. Okay. When I am selling these securities, it is 120 rupees, for example. That whatever the different price, that appreciations, whatever the profit earned out of that buy and sell transaction, that what I paid, no, that is called capital gain. That whatever the capital is gain, no, for what I am going to pay the tax, that is called capital gain tax.
Okay.
This is the difference in equity segment.
So the next is question for Ologanathan sir. Can I start trading with 30% of my salary? Is it financially advisable for me at start of my career? Is it risky, sir?
It purely depends upon your risk appetite, as I can say. So since you said that you are a beginner, always advisable to approach the certified financial advisor to take a help to diversify your investment. That is a recommendation I used to give. So always investing is better, but for that your risk appetite is more important than the investment.
Okay. So the next question is, how can we find the right financial advisor, sir? Most asked question.
Yes, sir, can able to
Yeah,
help out
see,
with
first thing is that in your locality, identify the person who is into the financial distribution thing. Look at his track record,
Okay.
look at the testimonials, look at the wide range of products he is doing, look at what is the value creation he has done in the past, and do the due diligence whether he is compliant as per the regulatory requirements. And all these things will give you a fair idea, and most importantly, you need to have a long-term relationship with the planner. It is more like a marriage. Okay, it is not something for a short term. You need to have a long-term relation. For that long-term relationship, you need to give your goals very, very clearly, and you need to be as transparent as possible to the financial planner. The same way, the financial planner should be as transparent in dealing with your products, and he should also maintain the fiduciary responsibility. That means I am managing somebody's funds and I will not have my own preferences to it. I will act as per his goal, as per his requirement, as per his risk profile. If that is done, I think you will be financially, he will take you to the financial freedom, or he will take you to financial destination.
Okay. Can someone younger than 18 access mutual funds?
No, they can come as a minor represented by guardian.
Okay.
That will be done by either a mother or father. Previously, grandpa, uncle, niece and others can also come as an investment to that. SEBI has made a change in that. Nowadays, it is important that a minor represented by guardian, and the investment has to be routed to either a father or a mother. Any third party payment is not enabled, even though if they are grandpa, grandma, uncle, aunt or other thing. It has to be routed through the kid's account or guardian's account. Guardian, I mean the father and mother.
So a basic question, sir. How to control emotions while investing?
Oh, very difficult questions, I think. See, that purely based upon your life expectancy, from how you are brought up, what all the investments you are done by your father, what all the investments you know. So to control emotions, you need to idolize people like Rahul Dravid or MS Dhoni. Why I am giving cricket as thing is that even though they have pressure, they never act in that. So they will not get swayed away by that emotion. So you need to stay as calm as possible, and always remember, what has come down will definitely go up. India is the second largest, fastest growing economy in the in the global economy, and our systems are in place. GST is in place. Business are having good track. We have the youngest population in the world.
Okay.
and our economy is also transitioning from 3 trillion to 6 trillion over a period of time. And we have been importing mobiles, now we are exporting mobiles. We are importing defense now we will started exporting that. So you can look at the transition happening around us.
Okay.
So and the good amount of infrastructure spent by the government, whether it is on the roadways, whether it is on the railways, wherever you see metro only, right? So the amount of digital infrastructure being built, the digital of the amount of leakages being stopped, all these things augurs well for the economy, and have faith in the economy, work hard and enjoy the benefits of compounding, and don't forget to stay invested and invest as per your goal.
Okay, the last question, sir.
Yeah.
So why is the expense ratio high for a regular plan?
No, yeah, see, in direct plan what happens is that there is no intermediary involved. You will not have any
Commission.
access to anything. It is the distributor will not have access to your portfolio. It is between you and the company. But the difference between the regular and direct is that in the regular plan, that is the difference what the distributor is making. Sometimes it's not fully. In that 60% or 70%, right? But look at a distributor who is working for your goal, and that marginal difference of 0.75 to 1% will not be much, because nobody works free, no? If you are going to your company, you need to be paid for that. Then only you will work, right? If somebody is going to manage your investment, he has to be paid for it. Then only you will manage, right? Otherwise, how it is possible for him to run his household? So, but having said that, just look at whether the distributor is working on your interest, whether the distributor is identifying the schemes and the funds with all the due diligence. You can question him, you can get clarify on the products what is recommended, you can have more detailed discussion on that. But expense ratio is not the only thing to determine a plan. But having said that, the regulator has said that the direct plan will not have the distribution commission, regular plan only will have distribution commission. That is the difference, nothing else.
And we have come to the end of the session, sir. Thank you so much for sharing your knowledge. Thank you, sir.
Thank you. Thank you.
So thank you for sharing your knowledge about the financial planning and as well as the mutual funds. Thank you so much, sir.
Yeah, pleasure to be here.
Thank you, sir.
Yeah.